Well, we've done some work. I mean, I came over to join Treasury as part of their tax team with the idea of giving the government, which that time, of course, was Dr. Cullen as Finance Minister, but giving them some advice on medium-term tax reform.
Okay.
And so I came, did some work leading up to the briefing for the incoming minister, which turned out, of course, to be a new minister. And so we were quite keen that the new government coming in, that we should have A, good advice to give them, and B, tested advice, that we'd try to get some peer review, as it were, and feedback from others before we started formally giving Minister advice about what we thought he should do about tax reform. So the idea, it wasn't just my idea, the idea really evolved of having a few seminars, considering who we should invite to those seminars, and deliberately target people that we felt understood the New Zealand tax system, understood its problems and its good points, and that they could then assess what, as Treasury and Inland Revenue advisors, we were thinking of putting forward. And in essence, we decided, well, we needed to go to ministers with this to get approval for doing it. And the idea arose, well, why don't we make the whole thing much more public, make it a proper process, we'll get peer review, we'll get comment, and ministers were up for that, and that's really how it happened. So it ended up having quite strong ministerial buy-in because they were keen to see the public debate happen.
And in terms of the outcome of that tax working group report, well, we know what all the changes have been. Do you think they were sufficient as to where you thought it was heading when you started the project?
I think, well, as an academic and as an economist, you've got this idealised view of what the tax system should look like in a sort of perfect economic world, and anything that's going to be implemented in the political arena is never going to do that. Right. And indeed, the appropriate tax system depends on different people's value judgments. If you want a tax system that's going to do lots of redistribution, you may have to be willing to sacrifice some efficiency properties. If you want a very efficient tax system, or one that nobody can avoid, it might not be very good at redistributing income. So
it would be broad-based.
It would be much more broad-based, and it might not have as much emphasis on income taxes, which we know are the primary vehicle within the tax system of redistributing. So in thinking about what's the right kind of tax system, you've got to weigh all these up, and then you've got the choice between corporate tax changes versus personal tax changes. And inevitably the government's got different views of what it wants to achieve, and the tax, I think the reform that we ended up with was probably a mixture of what most economists would say were really good changes, sensible things to do to improve the working of the system, and others will be a matter of personal preference. Some people would like them and some people wouldn't.
And at least it kicked off a debate, I guess.
Yes, and I don't think the debate's over. I mean, as you probably know, we're organising here at Victoria University a set of debates, one of which is going to ask the question, should the tax rate on capital income be lower than it is now? So one thing the tax reform did was to reduce tax rate on certain investments to 28%, same as the corporate rate. But other things are still taxed if you're a top rate taxpayer at 33.
Right, well, let's talk about that, because you mentioned in the debates, the release about the debates, how in Scandinavia it's half the price, sorry, half the rate, the taxation on income. So what are your thoughts about that, being a tax man, I guess? Well,
again, there are two issues. One is the feasibility of introducing a tax system that taxes some types of income very differently from others. And the Scandinavians have made it work, but they've made it work by having all sorts of rules around defining what counts as capital income and what counts as labour income.
Okay.
And we know when you and I earn income, say from interest on the bank, that's fairly obviously capital income. We haven't been working to earn that money. But there's a whole set of types of income. Entrepreneurs earn, for example, capital gain type income. Is it all income from capital, or how much is it, in a sense, reward for you using your brain power as an individual?
Right.
So you've got to be very careful about how you specify different types of income, and that's a tricky thing to do. So if New Zealand was to go down that route, that would be careful thought.
Okay, so that'd be another huge debate.
So that would be another huge debate. The other issue is we know that it may be more efficient to tax capital at a lower rate, because that way perhaps you don't lose capital flowing abroad that it otherwise would. But it means that people, and it's typically higher income people, who earn a greater fraction of their income from capital income, they're getting a free lunch, as it were, relative to other taxpayers.
The argument is you incentivise the people to have that capital there, and that has the flow-on effects.
Yeah.
I guess.
Yeah.
So
it has flow-on effects, but it's very hard to persuade somebody at the bottom end of the income distribution who's earning, say, 40,000, 20,000 a year, all entirely through source deductions, employee, PAYE, that why should they be being taxed at a higher rate than others are being taxed on their capital income when they're earning a lot more.
Right, and there's also the argument, obviously, of the disparity between capital gains on housing and capital gains, say, on, or the capital income on term deposits.
Yeah.
Obviously, there's obviously a disincentive there still.
Yes.
So would you like to see that evened out?
I would like to see it evened out. You may remember at the time of the tax working group, well, depends how much detail you read into it, but the tax working group had a difference of view about capital gains tax.
That's right.
And the Treasury and Inland Revenue had different views about advising on a capital gains tax. And it is a balance between pros and cons as ever. I came from the British system where when I first arrived in New Zealand, I never thought I would recommend a capital gains tax because the British system was at the time, was one of the worst examples. Lots of carve-outs, all sorts of complications that just made the system very difficult to apply.
You got that with the GST system over there as well.
Yes, same with GST. Lots of exemptions, lots of different ways of applying it. In New Zealand, my on-balance view at the time of the tax working group was that probably the ability of others to avoid tax, who you would otherwise like to be paying tax, was sufficient to say we ought to look at trying to introduce a capital gains tax, but introducing it around the same rate we would tax any other income.
Right.
Which is different from setting up a separate tax specifically for capital gains, which I think, like the British system, does cause all sorts of difficulties.
Cool. So you just broaden the definition of income.
Broaden the definition of income.